Hey, good morning, everybody, and welcome to TheoTRADE Chat. It's Don Kaufman here. It's bright and early. It's April 24th, 2024. On this Wednesday, we are seeing SPOOs up mildly. The Nasdaq's running a little bit further. Maybe, just maybe, that has to do with some Tesla earnings, specifically this morning. Look at that, Tesla. It's making a comeback. Yeah, we'll see after the cash open, but on a percentage move, it's decent sized move. But it's not even so much Tesla right now as it is Tesla talking about buying crap from Nvidia, and it lit up the once again the AI trade. AI trade's back. Look, kids, Big Ben, Parliament. Anyway, S&Ps are up some 7 handles this morning. One thing to point out, the volume, it's much better than I would have anticipated for what at least I thought was kind of quiet overnight trade. I didn't see anything exactly rocking, but yeah, nevertheless, the S&Ps are doing some volume. Also really notable, the bond market, it's coming right back down under this 114. There are some pretty significant auctions. The 2-year, that's easy and done with. The 5-year could be a little bit more interesting this morning in any regard. Yeah, no, this is a dicey cash open, more so than I think we give it credit for. And it's dicey on the front of, look, forget about what you think about the S&Ps for a second, and forget about what you think about the bonds. You do have the dollar rallying a little bit this morning, but then it faded. To me, the thing that matters the most is this expected move. This is the upper edge of the expected move. And we're going to open kind of off the upper edge of it. Kind of where my mouse is right now is basically where we're going to open. And that's very close to pushing off, which we did in overnight trade. When I say pushing off, this is where, everybody, turn those machines back on, and we start seeing buy side activity to the upside in a furious manner. Anyway, so we're going to come into the cash open here in a few seconds. Obviously, we're going to see positive ticks, positive advanced decline line. We're initially going to have a bullish tone, but I got to tell you, I would assume the highest probability is you pull back to the edge of what is expected. And again, that's why I think it's going to be a little bit more of a dicey cash open. I'll explain more here after the bell on that particular front. Also notable, volatility just continues to, well, kind of resonate in this, upper 15 handle. At the bell, as I said, well, how ironic, the advanced decline line is not even positive. I've been looking through this crap all morning long, and that's the first time that I've actually seen some of the sell side in here other than a few of the sectors. But look at this. In the pre-market, the financials were up a few minutes ago. In the pre-market, you actually had the energy sector up. Okay, what a difference a couple of moments makes. How entertaining. The ticks are also negative. Boy, talk about being proven wrong here into a cash open. This is interesting because this is almost like correlated to the downside. Now, look, things that are down are relatively flat, but back to the SPX for a second. Let's just take that back here. Yeah, we're not going to break free of this. We're going to pull back into it. So we're going to pull right back into the edge of the expected move. Okay. Interesting. Okay. Very interesting. Sorry, I was just reading the news bot over there. Somebody said Oracle is moving to Nashville. Okay, it's all full. It's all full. Nashville full. Okay, we don't need you here. We do not need you here. I did not see that come across the PR wire. That is interesting. I just want to go look really quickly. So are they bailing? Are they bailing? Nice conflict of interest over here. Holy crap, they are. Oracle is going to move reportedly to Nashville. Yeah, boy, you really know it's over for California when Oracle, which has been there since you know, basically it's one of the first of the big tech companies. It really is one of the first of the big tech companies. I can get by with the Elons and so forth moving, but Oracle, I mean, they are pivotal in the Silicon Valley. Just pivotal. Anyway, I'm gonna sip my coffee over here because everything's going off today. It's all wrong. All wrong for me. Look, I'm sipping my coffee because I'm just waiting for us to come back to this line. I mean, yesterday morning, and bear with me on this thought for a second, but yesterday morning, as we came in here, I actually said to a couple of people, right when we were in this neighborhood, don't short nothing. We're going to hit the edge of the expected move. And then I said the whole day will come down to the edge of the expected move. Well, that's what we did. Okay. And unfortunately, that's exactly what we're about to see today. So today, the pivotal area of today's trade is if we do get right back down here, which is only a few points away, right? It's only 10 points away or so. We get right back down here. Question is, we'll kind of ebb and flow. Are we going to get a break back inside of it? I'm already very surprised at what you're seeing in the tape. The financials, okay, are down in the day, nominally down, but they're down in the day. It wasn't like that in the pre-market. The energy sector is actually taking a decent sized hit of the tune of almost 1%. But the most interesting thing, and this is what was also not there in the pre-market. In pre-market, a bunch of the tech stocks, they were up through and through. They were up. I'm interested to see, how this is going to play out in the next couple of moments because Amazon was up in the pre-market. Google, Google had a decent bid this morning. Obviously, it's faded a little bit from there. Everybody loves Meta. I'm not sure why. Earnings are forthcoming. If you will, that will be today. You know, I guess sell now or forever hold your peace. By the way, everything that you see inside of Meta lately has been bullish regarding earnings. Meta, the last earnings period was absolutely spectacular. You would assume that everything would be priced in, but I guess the irony is it hasn't really done anything since the previous earnings period. I mean, it jumped to 475 and whatever, 25-point range. 25-point range is nominal for a product that today, we'll talk about this more, but today has a $42 range. I just wanted to make a brief point about Meta is it's riding high, but it hasn't done anything at all since its last earnings after kind of smoking through its expected move. But a $42 move is put on your big boy pants. That is a big one, a very big one. And anyway, with that being said, let's kind of go onward and upward from here. The S&Ps, as I said, just kind of floating around a little bit right now. To give you a feel for ticks, there isn't one. They're scattered and broken. They almost look like they're going to turn around positive. Okay. The tape this morning, again, belongs to Nvidia, maybe a little bit of Meta, and Tesla does have an impact today. Even though it's a much smaller firm, Tesla definitely has an impact today. Speaking of Tesla, I do have a spread. I have several spreads on here, but I do have the spread that I put on yesterday, specifically for earnings. So I'm just going to go take a quick glance at this. And again, I have a lot of different trades on Tesla. So I'm going to try to whack this trade for somewhere in the neighborhood of like $1.90 and see if they fill me. All right. I'm just going to let that one work, ferment for a while. Okay. Because I am complacent in the idea that this spread will end up in the money. It's a $2 wide spread. It's a $2 wide spread. I'm trying to get out for $1.90. They're not going to give me $1.90 right now. Okay. They're not. They won't. They can't. Okay. Nasdaq continues to run a little bit higher. Now, bear with me on this thought. Okay. The last, tell you what, the last 24 hours of trade's been interesting. So I was out there buying a call spread in QQQ and financing it with selling calls in the S&Ps, because at this point, Nasdaq, okay, is really the only thing that's going to have teeth. The financials, kind of pretty moderate. They already had a humongous bid back under them. So I've got like kind of a little bit of a short-term volatility plan, a little longer term out. But in the very short term, okay, obviously in the short term, I'm looking for the financials to roll back over. I would not say that about the NASDAQ. The NASDAQ is obviously kind of running. NASDAQ's on fire. NASDAQ right now is actually pulling the S&Ps, kicking and screaming along with it. And that's why I said the first few minutes of trade over here, kind of let it resolve itself. I mean, it's pretty interesting because there's not that much, driving markets. We were almost correlated to the downside, which is pretty shocking to me. I mean, much to my, I think I'm a little confused in looking at the tape right now, because all of a sudden we came back and the monsters of tech are the only thing that anybody wants to buy. Does that change, though, the notion of volatility of the overall markets? And I would say absolutely not. Okay, that's one thing, again, be kind of mindful of, is that the NASDAQ ripping over here, we expected the NASDAQ to kind of be its own animal throughout the course of this entire week. The reason for NASDAQ being its own animal is earnings. And just plain and simple, it's earnings and earnings announcements. Okay, this could have gone very differently had Tesla come out with something, a little bit more obscure. Speaking of Tesla, it's selling off a little bit in here. Not much of a concern. Again, I had the bullish trade on. Did everybody see that yesterday? I popped it into the chat room about 30 minutes before the close, just giving everybody an opportunity to get in there. Again, I am working to close. I'm working to close at about $1.90, and the trade's at about $1.60, which implies I'm not going to get out just yet, but I'm going to let this thing work because, and I'm going to explain it really quick. It's a $2 wide spread, and the $2 wide spread is deep in the money. Okay, and again, just let the market do its thing. I think again the market's going to pull back to the SPX expected move. That's my take this morning. I'll just give you it for the setup for this morning. I'm still of the opinion. I mean, look, we're very close to breaking to the upside. We're very close. I can see the S&P's up 14, but my take in early trade is that, largely based on like a really negative advanced decline line, there's enough pressure in the markets, okay, to keep the S&Ps kind of moderated, and I think eventually they'll roll back over and we'll drive into the that edge of the expected move. I mean, to me, that has to be the highest probability trade. I don't want to, give you, like, this is not Ouija board kind of crap. It's, you always have to go with the highest probability on the screen. And the skin in the game in this business is right here. I mean, we see this every freaking week lately. Every week we hit the edge of the expected move. In fact, before I go and talk more about Tesla, I'll bring up like the last 20 days, even down to like a 1 minute, or make it easier to look at, maybe like a 5 minute. All right. Look how much time we spend. This is the upper edge of an expected move. This is the lower edge of an expected move. This is the lower edge of an expected move. Okay. And that's going back a few weeks in here. Okay. Here again, it's the lower edge of an expected move where we pierced through and then basically ended on it. And it just goes like this and goes like this week in and week out. So at some point, you come to the realization, you get relatively close to it, you adhere to it. Today, okay, even though I just said like, oh, the highest probability is coming back here, the lower probability is a rip to the upside. Okay. And if you're looking at this, you're like, that's it. It is breaking to the upside. It is definitely close to breaking to the upside. Clearly, the NASDAQ is on fire. Even if we do break, kind of, it's pretty well charted territory. We've been all the way up here today. I still give it a probability of rolling over at some point, but we'll see how it plays out. Again, it's when you're that close to an expected move, it's kind of like a 70-30, where you're like, well, there's a 70% chance, if you will, of coming back here at some point during the trading session. The 30% chance we break off to the upside. But if we do break off, it's a big break. It's a big break to the upside. It's this constant, even though it's a higher probability of getting back here, okay, that's not that big of a move. The lower probability carries a big move with it. Just something to kind of think about. All right. Speaking of expected move today in the SPX, the expected move is roughly was it 2669 is the expected move. That's today's move. Obviously, we're seeing about $16 of that already in here. So just be privy to that. I look a lot less at the Nasdaq expected move, but if you will, Nasdaq, and again, I prefer to look at the QQQ expected move and multiply it. Okay, so here we are. This is the Q. It's about a $4 expected move, and we're home. I mean, maybe a little bit above it right now, but basically we're riding on the daily expected move in the Qs. And people constantly ask me, why do I always diminish, okay, the NASDAQ futures? I'm not diminishing the NASDAQ futures, but I'm looking to where there is volume, okay? Expected move is not a freaking fictitious animal, okay? It takes volume to adhere because volume moves markets, right? Order flow moves markets. You have 325,000 contracts already trading in the Qs. If you look at the NASDAQ futures, there's like 3,000. Okay, I know that there's 3,000. Oh, those are big contracts, but still, the contract size in there is pretty negligible versus what it is inside of the Qs. Everybody good? Everybody good. All right. So that's SPX. Kind of give you maybe a little bit of the setup for the day. And again, the ticks. It's just an interesting day because the ticks are negative. The advanced decline line sucks. I mean, it's 70 stocks to the downside. We're not pulling back because there's a handful of NASDAQ stocks that are running, and that's fine. Now, back to Tesla. So I actually have several trades on Tesla. The first trade I'll talk about just briefly, I put on a long time ago in a galaxy far, far away, I put on a bullish call spread in Tesla for Catapult. And I did it because we're making a precipitous move to the downside. So just to give you an idea of how long ago that particular trade was, survey says March 15th. So where was the stock? Where was the stock in question? There it is, March 15th. That's when I put the trade on. So I put the trade on here for us to get back here. Now we are here. So the Catapult is kind of becoming closer than it was. This was a trade that was down 99% yesterday. I think it has 23 days left. Okay, 23 days left to live. And it's a free trade though. It's like I didn't pay for it. Okay, I didn't want to pay for it. I didn't have to pay for it. I sold crap to pay for it. And the crap that's up here, this has nothing to do with the Tesla trade. These are MES puts. But this was one of the first trades that I did for this Catapult portfolio. Anyway, so it's down 50%. And you go, oh, but you're losing 50%. I'm losing 50% from an initial price that I paid, but I covered 100% of the cost of it. So even if I sold the trade right now, I'd be collecting 70 cents. That's all profit. So at this point, you say, whoa, let's get out. Why? We're finally moving in the right direction. I might get out. I don't think it's going to make it all the way to 185 in 23 days. Okay? I don't think it's going to make it. But I think I'm willing to roll the dice. You want to know why? Because I have zero in it. I don't care. I have zero in it. And that's the way that you have to trade when you have like zero. Like, look, I have the trade on, but I don't have any skin in that game. Meaning like I don't have anything at risk. So at that point, screw it. Let's just sit through and hold it. Does that make sense to everybody? Okay, maybe. Okay. By the way, just let the market do its thing. Again, we're slopping around. We're gonna do a little dance. We're gonna make a little love and maybe descend tonight. Right? That's it. Yes, descend tonight. That's what I said. Just making sure everybody's got that one. Okay. It's recorded. It's recorded. Anyway, as I'm saying about Tesla, so that is the catapult side of the trade. Okay, that's one that some of you may have on. Huh? Anybody actually have that catapult on? Tesla catapult, because I'm going to get questions. How are you going to manage it? Okay, I will manage it when I am good and ready, sir. Okay, now we're getting someplace. Next on the docket, okay, we have, excuse me, next in the docket, we have an earnings trade that I did. And the earnings trade is, well, quite simply put, deep in the money. Let's come over here, close that crap up. Let's go back. Why 7 days? No, yeah, trade history. So I went out and I traded a $2 wide spread yesterday, okay, with about 30 minutes to go to the close. It's an earnings trade. And I paid 78 cents for it. So 78 cents. Anybody do the earnings trade? Who did the earnings trade? Earnings trade. So I paid 78 cents. What's the most you can make? A $2 wide spread. You can make $2, of which you paid 78 cents up front. So the, what is it? Risk reward over here, you can make about $1.20. So you can make about $1.20, right? It's $2 wide spread. Because I paid 78 cents, I can make $1.20, yada, yada, yada. Okay. Why did I pick these strikes? Because I like them. I don't know which trade we're talking about, Dimitri, but give me a break, man. Anyway, so I go out and I pay 78 cents for this trade. And the reason I actually paid 78 cents, I wanted to pay right around 80 cents for it. Okay. I did this because I think it affords you a nice risk reward in something that has a significant expected move. So last night, Tesla last night had about a $15 expected move. I mean, it's doing it. Like it's pretty much on it. Let's not split hairs because the damn thing was spot on it a few minutes ago, right? So it made its, $15 expected move pretty much to a T. Okay, pushing that aside for a second. So why these strikes? Why, if I traded the edge of the expected move, okay, because Dimitri was saying he traded the edge of the expected move. But with all due respect, Dimitri, if you trade the edge of the expected move, and I'm going to give you the exact reasoning, whether you like it or not, okay, so just sit there and listen. The edge of the expected move would have been up around the 160 strike. That would have been the short strike, because it was a $15 move being priced in, right? So if Dimitri traded the edge of the expected move, the upper edge of the expected move, that would have been around 160. In fact, let's bold this out. Okay, so here we are going to the expected move. The expected move is plus or minus basically $15. So 160 would have been the upper edge. So if Dimitri does a spread, okay, anywhere around the 160, the problem is there's still a few days left to expiration, and all the extrinsic value, extrinsic being time value, is now going to sit right on top of Dimitri's head, and Dimitri ain't going to make anything, okay? Ain't going to make much because there's too much time value still present. So even though he's making decent money, okay, it's very often difficult to make a ton on that trade. And again, it's just, quite simply a different risk reward. Also, his probability is diminished, but I don't like it because there's so much time value still packed in there. Okay. Profitability is one thing, but putting on the right strikes to keep yourself intact is another. So I'm actually in the trade for 78 cents. Okay. And I will get out for $1.90. Okay. And that's it. It's similar in respect to what you're trying to do, but I'm going to have a slightly higher probability, but I also have very little time value. Time value can have a very big impact in these trades. So you can see I'm working $1.90 credit. And what has to happen in Tesla, it doesn't have to go up. Volatility has to start to subside and will fill. Okay. And again, like I'm not going to split hairs over a couple of pennies. You can see it's basically trading right up against me right now. So it's $1.90 mark. We're like next in line. You can come in here if you want. Like if you get really punchy, it's okay to take it and cancel replace at the exact same price. Just letting everybody know, and you're trying to get out, right? Cancel replace. So I work it there, take off 1 penny. Okay. Maybe I attract some interest. Okay. Are you attracted to me? Anyway, I take off a whole penny over here. Come on, Captain One Lot, rise again. But it's earnings, and we'll see how if we get filled in here. It can be a little challenging, but this one's deep in the money, and suffice to say, we're in very, very good shape. Even a big pullback today is not going to threaten this trade. Look at the deltas on these, 93 and 91 delta respectively. Okay, so yeah, they're still not filling me. Okay, those little, when you guys look at something called mark here, that mark is actually a composite of bids and offers from 20 different exchanges. I don't even know how many options exchanges there are anymore. I don't. Okay. I really don't. There's so many different option exchanges. There's electronic networks, and then Citadel is bigger than most exchanges, and so is Virtue. But they're evil entities, so I can't talk about them. Anyway, with this, I suggest these are probably the more effective strikes for the proper risk reward. All right. Let's just take a look. So Andy was saying catapult. I did a different one the other day that has not been paid for since we started rallying against the calls. Okay. Listen, when you're doing a catapult, and I'll just make this kind of clear because obviously we did the catapult sessions here. But when you do a catapult, if you're worried about the next few days of trade, don't do the catapult. You try to put trades on a good time. Okay. I waited very patiently yesterday for us to hit the edge of the expected move, the upper edge of the expected move, and I sold a call. But I'm not worried. Even if we rally, okay, here's the call I sold yesterday. But still my heart, even if I was down, on this one, who cares? Who cares? Gotta do the right trades. You sell a call, you buy something else. But what has to happen is you might lose money. So you're losing money on the call that you sold, but the spread that you bought doesn't kick in till later. Okay. You're not worried about here and now with Catapult. You got to worry about 30 days out. Okay. At 30 days out, the loss you took on the call should be offset by the spread. And it's a non-linear event as well. So it's very difficult for people to plot in their head. I'm losing X amount on the call I sold. I should be making it back. It's a very difficult, but you can plot all of that. Isn't that special? Okay. Isn't that special? All right. So Andy, you can't worry about now. You got to worry about then. And it's a really important thing. I know that sounds kind of ridiculous, but you got to worry if you have, goggles on and you're looking right in front of you, you're that's not how you trade the catapult. You got to have basically vision for 30 days, 40 days, even 50 days out, because the kind of spreads that I'm doing, like in Tesla, I took a shot, man. Took a damn shot in Tesla. And I'm not saying the Tesla spread is even working, but I'm saying I took a shot when this thing was getting the crap beat out of it back here. I could have been somebody. I thought, holy crap, it was down a lot. I didn't think it was going to go to 140. I really didn't. I wouldn't put the trade on if I thought it was going to go to 140. But I did put it on thinking to myself, I knew earnings were coming out and that I'd still have 20 some days. So even if I really, really suck, there's still a chance of less suckage in the future. You got me? Less suckage in the future. We're coming home. I got to get out more often. Seriously, I got to get out of the city. Okay. I'm not going to Nashville or anything, but I got to get out of this city. Okay. There's too many damn people here. It's over for Don in major cities. Okay. Just move me to a damn deserted island. I'm good. Okay. Continuing. Ron was saying, got a bit nervous for a minute experimenting with ES. Okay. 4 short contracts on the ES is, Ron, huge. That's huge. I mean, that's, for the average trader over there, you're going to puke. Because, for those of you that have no idea what the hell we're talking about, every tick, when you trade an ES, every tick we move, he would be making or losing $12.50 per one contract. For a full point move, then he's making or losing $50. But on a 4 lot, he's making or losing what? $200. So you'd be making or losing $200 for every 1 point move in the S&Ps. Okay. And that's, I mean, I have no problem with that. My account probably resembles that remark. But for a lot of people, the first time you see that, Ron's, got his head between his legs, the metal garbage can that is an office garbage can that has holes in it is not a good thing to puke in, Ron. It's just not. It's not. You got to get the solid garbage can, not the one with the holes in it if you're going to puke. So just ease up, man. Just ease up. Okay. That's yeah, we're not there yet. Okay. We're not there yet. I'm waiting for us to get there, but we're not there yet. We're here and we need to get here. How are we going to get there? I don't know, but it's going to be exciting. Okay. Next thing on the docket. So I wanted to explain a little bit about some of the Tesla trades. And again, the Tesla trade, it's not filling. Just freaking relax. Just leave it on because it's $10 deep in the money. Well, we'll see. Sometimes you just got to let those trades work. And as I said, as the volatility wanes, somebody will fill you. Okay. Somebody will fill me. Somebody fill me. Sometimes it's hard though to get out of deep in the money options. I make no two ways about that. It's hard because there's less liquidity as you go deeper in the money. Okay. It ain't easy being deep in the money. Look at the bond movement. So bonds, even though they're fairly quiet this morning, that's the sleeper in the room for today. It is. One thing, again, I want you to focus. Okay. Sorry. I'm reading back over here. There's not going to be enough coffee to get me through today. It's going to be a long day. Okay. One thing I want to make a brief mention of the bonds and the overall marketplace. So the bonds, once again, are seeing what I would term slippage to the downside. If there is a critical threshold in the marketplace right now, a place that could snap the back of the S&Ps in half, it's got to be this bond market. Because with the bonds where they presently are, right, you look at stuff like TNX, tell me that is not looking like, I mean, because people look at charts on this crap. Yes, everything, by the way, is crap. There's nothing real. It's all crap. Okay. So this is the 5-year. Okay. This is the 10-year. They put CGI. Okay. I have no idea why. Anyway, the TNX, which is the 10-year treasury. Okay. Looks like it's forming this line that's going to just go boom straight up. That would be my interpretation of this, chart. Okay. It's interpretive dance. All right. So I think I was watching Seinfeld like late last night, I think. Okay. I always turn Seinfeld on like late last night, but okay. I had like an eye open when I was like still kind of awake. And it was Elaine with kicks, little kicks. It made me think of that. Anyway, that's what I think of technical analysis, Bierman. Are you listening? Okay. It's like little kicks. I'm waiting for him to like just jump on the Zoom call over here and be like, yeah, it's not okay. Losing his mind. Anyway, I don't know how I went from a chart to little kicks, but seems about right because you're interpreting like, dance at this point. So it does look low, like it's going to break out to the upside. That is my inclination of looking at this. Okay, we'll see. With uh, the bonds and notes, this is specifically, these are notes. By the way, the difference is when people talk about bonds, bonds is a pretty generalized term. He fills. All right, sorry, Tesla. Out of the contest. Anyway, another Seinfeld representation there. Ah, if I had to pay them like every time I actually made a Seinfeld thing, okay, it's a good thing I'm not watching Family Guy as much as I used to too, because things get really screwed up. Or, a show like F is for Family. Have you guys seen that one on Netflix? Absolutely hysterical, sick and wrong. Okay, it pretty much embodies my entire childhood. I like it. If you want to know what's wrong with me, watch F is for Family. It was actually, I think, Tony Rago that turned me on to that one. It's good stuff. Okay. Anyway, people like bonds, notes, bills. Look, it's all the same crap. It's debt. It's paper. They're pushing paper at you. It's debt. So in the debt instruments, specifically here in the notes, it does look like it's going to pop through. It just does to me. Okay. Again, as I interpreted that through interpretive dance. And I think that could snap the back of the S&Ps. I think it's also probably one of the reasons that if you haven't looked around, I am more than aware that volatility has come down. But to say that volatility has subsided would be a humongous misnomer because what hasn't subsided, the volatility futures are, they went into backwardation for a brief and fleeting moment in like overnight trade, right? So in overnight trade, they went into a backwardation, but during the trading session, they got flat. They didn't do very much. But I will point out they're still damn close, too close. Like the vol futures don't look right for a marketplace that's rallying. Okay. Survey says volatility is absolutely unequivocally still with us. So I'm going to make that very clear until I would see otherwise. Now, I did see the VVIX, that's the volatility of the volatility index. I saw the VVIX crush down. That, though, doesn't surprise me because at this point, like the VVIX is for people, you got to understand in context. The VVIX is like if you got surprised by volatility, when the first shot is fired of volatility, VVIX is on the ball. Okay. But when subsequent shots are fired in volatility, VVIX doesn't matter. I like to say that because it is a huge big, big misunderstanding. Big misunderstanding. Jumping around over here. So when the first shot of volatility is fired, VVIX will react. Thereafter, it doesn't have to. I mean, unless it gets really serious. I am horrendously serious. And I need only point a few years back in the day. Okay. So here is the year of, 2021 was not like crazy. It was actually an up year. In 2022, okay, which is right here, there was heavy volatility, but then look what happened to the VVIX. It subsided. But what was the market doing at the time? July, August, September. Okay, July, August, September, the VVIX is pretty much where it is right now. What was the market doing in question? Okay, back in 2022 at that point. And the interesting aspect, it was getting freaking rocked because the first shot of volatility was felt early in the year. Okay, the subsequent shots of volatility were already being handicapped in other instruments. Are we okay? I wanted to show you something interesting, something different today, something that I haven't talked about in a really long time, because I absolutely saw the comment yesterday fly through the chat room here at TheoTRADE to where the VVIX is down, all clear. No, the VVIX is down. Okay, shots were already fired. Whoever needed to hedge and was caught off guard got a hedge on. That's basically the VVIX jumped. It abated. Okay, it abated. We could be in the throes of heavy volatility right now. It's not, not necessarily going to have to rock the VVIX back to the upside. Nevertheless, Okay. The bigger picture, though, over here is the bonds could break today. And if the bonds break, okay, I think it's going to cause some issues, not just inside of the financials. The energy sector has been under a little bit of pressure today, but has rallied back up. And again, the financials are basically flat on the day. But if we start to see the bonds break, that's when we could start to see a hit taken by things like the likes of Google. Speaking of Google, okay, we will see earnings after the market. After, okay, after the market tomorrow. So it's after. That's why I said after. All right, next aspect on here. So we had Tesla's earnings, Google's are coming up. Meta is today. Meta is the big one for today. So what am I going to do in Meta? I already have a bearish position on. I'm not likely really to do anything in Meta. Okay. Look, I've made this clear. I'm not talking about its earnings. I'm not talking about a short-term trade, but I personally think the company is a big pile of crap onto which there is no escape. They have no way to make money other than to advertise, and no one under the age of 105 is even on Facebook anymore. I know they have WhatsApp, okay, and I am more than aware that they also have somebody's going to be like, what about this one? It's Instagram, okay. Anyway, I'm not a big fan of Meta. I think that the earnings this time, and I'll be very forthright, earnings could be spectacular. What we have to watch out for right now, to me, is guidance. I think guidance is important. Okay. I think guidance is going to be considerably more important because there have been persistent clouds on the horizon in markets for like 2 years. Everybody's waiting for something to happen. Okay. Anyway, Dimitri was saying the TikTok ban may help them. Absolutely not. TikTok will not get banned in the United States. The ban will come, and look, when it comes down to it, if TikTok gets banned, it's going to be U.S. owned almost overnight. There's already money, okay, with Mnuchin, Munchin, whatever the hell you want to call them, been raising capital. There's actually a couple of people that are vying for the likes of TikTok in an acquisition of TikTok. But in the end, let's be very forthright. It does benefit Meta. It would benefit Google because of YouTube, okay? But overall, TikTok, who does it really benefit? The United States government, who just wants full access to all of your data, not just part of all of your data. And that is the real take. It's not about we can't possibly have a Chinese firm that does everything and makes every single chip. Oh wait, that actually does happen. Okay, where was your iPhone made? Okay, mine was made in China. Okay, they allow this, but no, TikTok is going too far, man. Just want all the data, all the access to the data. So that's really what it comes down to. Interesting that the former Secretary of the Treasury is all over that one. It's the data war. Okay, you can't do that to our pledges. Only we can do that to our pledges. All right. Bonds, though, are in a very threatening posture, as I've said. Okay. Some selling in here could have an impact even before the earnings and flip the marketplace around. And I'd watch stuff like Amazon today and Google because they've already faded just a little bit. I'm actually surprised that you're seeing any tech down today. I really am at this point. Speaking of Amazon, it's not on the docket until next week. So onward and upward. Okay. Yeah, somebody's gonna buy TikTok. Okay. I don't do no TikTok. My kids though are on it for sure. I know they're being brainwashed. Okay, by doing stupid things in front of the camera. Okay. Have you seen the mortality rate of doing stupid things for in front of the camera for YouTube videos and so forth? Holy crap. Okay. I'm dead serious about that too. I was talking to my kids about it, and I'm like, okay, so we all agree, like, you can do fun things, funny things. Okay, nothing stupid. Number of people that have died filming YouTube videos and TikTok videos is extraordinary. Okay, like extraordinary, on that of par of like disease. It's that bad, which kind of thinks makes me think TikTok could be a disease. Okay, what do you got? I got TikTok, man. Okay, so Meta is the only player in the room for earnings, and I think it's pretty critical to the Nasdaq, obviously, right? Because it's one of the biggest monkeys on the block, but it's got a $43 expected move. Okay, that is huge by huge. $43 expected move in a $500 product is big. I mean, you're projecting this 8, 9, maybe even a 10% move to play out. And if you're seeing right now the impact, okay, of Tesla, and Tesla is ripping, right? If you see the impact of Tesla, Tesla is the Nasdaq today. What else is really up? I'm just making a quick point. Tesla hasn't done a damn thing for the Nasdaq in a long time, but Tesla is the Nasdaq today. Okay, it's got a bid back under it. It's directly responsible for a significant amount of the gain inside of the NQ. Can you imagine if Meta had that type of a gain? I mean, the Nasdaq could be up 300-400, which again calls into question, okay, this realm of like, are we in volatility right now? Or are we not? Okay. Yeah, until we see otherwise, you are in a very volatile marketplace right now. Do not forget, okay, what just transpired. Don't get off your game. The moves that you saw the last 2 trading sessions are freaking big. Okay. Again, perspective is critical in this marketplace. The moves you just saw are freaking big, right? You took 2 days to do $100. This week basically had a $100 expected move. I think it was 96 to be specific, but this move, you're 100 and almost 20 handles higher on the week. Okay, that's yeah, fact right there. Because here we are at trading what, 49.66. You were exactly what, about 110 handles higher than the SPX. So doesn't matter what you think. Big waves to the downside, big waves to the upside. Keep in mind that the single largest and most violent moves, okay, the hallmark of volatility, are often the up moves. That is very indicative. Okay, I am not discounting the ability for Meta to come out tonight and light this market further to the upside. I'm not discounting that ability. Okay, but I am saying you're still in heavy volatility right now, and you need to think about sectors and sector rotations. At least that's what I do when I'm in volatility. It's one of the reasons that I did the XLF trade. To me, XLF, okay, was ahead of the curve. XLF had 2 humongous days up before tech actually moved, right? So we're still this disjointed, disconnected sector by sector movement. And if you take a look at the spiders, the spiders just went through 2 huge days to the upside. The XLF, yeah, it already had its big up day, okay, followed by what? The big up day was last Friday. It's one of the reasons that I actually shorted into XLF yesterday. Now, my XLF position is still, it's there. By the way, there was huge contract size on that one. Did almost like, we did 8,000 contracts in that thing yesterday. We're huge, man. Huge, I say. Anyway, if you wanted to get the trade on, it's still there. Like it's still there pretty much for the taking. So I filled yesterday at, well, a variety of different prices. 84, 86, 86, 85. Okay. It's still there for the taking at 82. You're welcome to still, put yourself into the XLF trade. Okay, good. Great, lovely. Anyway, it's you can see 60 more contracts in there. Um, we're huge, man. Yeah, I'm watching. Jim was saying bonds are moving down. I know. So, if you guys are kind of curious, people always ask what I look at on other screens. Here, I'll show you what I look at on other screens. Okay. Damn it. There's my other screen. ZB and the NQ. Okay, that's on my screen on the left. It's on the screen over here, and on the right, I just have the S&Ps. Okay, and I just keep this screen on the right. That's always on my screen. Okay, and then that's pretty much it. I have some windows that overlay a little bit over here, do a little dance. So I use, people always ask also, how many monitors do you use for trading? I could use one big one, but I actually break it into 3 because I like compartmentalization. Okay. I like to compartmentalize. I know that, we have some people here that are like, one big monitor is better. Okay. One big monitor might be better for you. Okay. But I think it sucks. And one big monitor is special. But I like to have, so I use 3 monitors for trading. And then I use 3 monitors down below for other crap. That's basically to run like TheoTRADE. Okay. Other crap. So I can actually read chat. Okay. I can read the monkeys in the Skype room. The monkeys in the Skype room. Okay. You have to feed the monkeys once in a while. That would be like Brandon, Tony. Tony's live right now, but we still talk even though he's live in the futures room. Okay. Todd is in there. Blake is in there. Jeff Bierman. The Jeff Bierman stays quiet because we ridicule him for everything that he says. It only took him like 20 years to figure that out, and he makes less comment. Okay. Good stuff. Okay. All right. Anyway, some selling started to hit the marketplace here. We got that going for us. Okay. Did I make the monkeys angry? I don't think I did. And then I have email over here, which is constantly distracting me. Did you know the Home Depot has a sale going on right now? Anyway, I just found out my email's coming in. Okay. A lot of times I actually have to close down the email thing. It's not working for me. All right. So what else do we have to talk about today? Okay. Oh, yeah, yesterday. I did a bunch of trades yesterday. So I did the XLF trade yesterday. I did the Tesla earnings trade yesterday. Okay. By the way, the XLF trade, I don't know if it's going to work. We'll see. Okay. We need to pull back. Pull back. Pull back. We need to pull back a little bit in the financials, and we'll be good to go. Look, I make no two ways about this. Market bid through. Okay. It could keep going, but at some point it rolls over. That's my inclination. I love to trade this way. When the volatility picks up, we go off. Oh, that's good stuff. I don't care. We just need a little bit of a pullback. Okay. I'm all about volatility. It's bounce and fade trades. And it's much better to look for the fade than the bounce. The bounce costs more money. Okay. All right. Continuing on there. I did a SPY trade yesterday too. Spider. For those of you that caught this, did anybody do the spider trade? Me. So I did an intraday trade in the spiders yesterday. Let me knock down the number of things that you're seeing in here. Let's just go back 2 days. 2 days. Okay. I bought something yesterday for 42 cents. I bought a put. I sold the put. Okay. For what? 34 cents. So I got out. I did take a loss. And I love to show trades like this because it's an intraday trade where, I was swinging for the fences and I lost 8 cents. That is the best way to lose money. Okay. It really is. And I like to go over trades, win, lose, or draw. It's important to look at this kind of stuff. It's critical, in fact, because you're going to lose. You got to know how to pull the trigger on the in and the out. And the out, look, I had 2 minutes to go to the cash close, but the spiders are open 15 minutes after. Okay. Why did I close it there? I didn't close it right before the bell. I closed it because we got a little bit of a dip coming into yesterday's close, right? I can actually show you here in the spiders, this little bit of a dip right into the close, right in this neighborhood here. I was like, I'm out of the contest. So I was able to get out and only lose 8 cents. That is a damn good losing trade. Okay. I know that sounds like such a ridiculous phrase, but it is. Okay. Speaking of which, I want to come back to the S&Ps for a second. So we look like right now we're about to smash through and break lower into the lower edge of the expected move. We'll see if this plays. Okay. Again, I did the whole little setup over here. It doesn't necessarily have to play the game this way, but hopefully we're sitting here. Okay, I would feel more comfortable. Again, this session is not exactly like heart pumping, volatility, but with all due respect, you have, I think the most interesting thing this morning, the 5-year note auction. Normally I'd say don't pay any attention to this crap. You should pay attention to this crap. You should today. The 5-year note auction is going to move the bonds. You move the bonds, you're going to move the markets. Okay. And the 5-year note auction, First of all, there was auctions yesterday, and they went extremely well, stellar, if you will. I would go as far to say as the auctions went off very, very well. Okay, and we'll see today. There is a phenomenal amount of debt, okay, being auctioned today, yesterday, and today. It's when I say phenomenal, I'm talking like record numbers of debt. Tomorrow morning there's GDP. So GDP obviously is going to make a little bit of a market move, and then to wrap up the week, it's everybody's favorite PCE data. So personal income and outlays. Oh, and the Michigan consumer sentiment. That's pretty much your week. So there's nothing else to update you on immediately in terms of any of the trades I have on. Okay. I was just kind of glancing at a couple things in here, but this is for inner circle stuff. Okay, inner circle stuff. Everything's actually just fermenting in there quite nicely. And some of the catapults, okay, pretty much flat on some of the puts in here. The meta trade though, I do have a meta position on. I have a bearish position on. Okay, tonight's earnings are obviously going to make a bit of a difference on there. Okay, other trades I've got on. I have a call spread in the QQQ. Here's actually a call spread inside of the XLF. The XLF trade is completely free. The QQQ trade, I'll just put that one on yesterday. So we'll see how it actually plays out. Okay. So again, not making a lot of moves. The XLF trade is brand new in here as well. This is the in-out spread trade. In-out spread, I'm just trade tracking that one. It's basically unchanged. We need a little bit of violence inside of our marketplace to make that one worthwhile. Remember, every in-out spread that I do, I look for the opportunity to make 30% in the first 3 days. So if I put the trade on yesterday, which I did, it's Tuesday, we have Wednesday, Thursday, and Friday, try to get out with a 30% gain. I don't know if it's going to happen. Okay. I mean, again, I'm a big believer that once you crack open a can of volatility, that doesn't subside. It doesn't go into the night quietly. Okay. And there's one thing that you should rationalize is, even though there's some big down candles over here and they're consecutive days, okay, the candles are just as big to the upside. And I know I've said that like 3 times today, but it's important to keep perspective on what is volatility. Okay, speaking of volatility, moreover, Amazon, that slippage in here is going to start to put some pressure into the overall marketplace. And I recognize that Tesla has ripped to the upside, but I'm also looking at Nvidia, which is struggling. And I would have thought after Tesla's earnings announcement, I honestly would have thought Nvidia could be up 50, 60 bucks. It didn't go that way. It just didn't go that way. And I'm kind of curious as to what's going on here. I haven't looked at any of the order flow. There's no call buying going on. There's no real put buying going on. This thing is left to its own devices today. So, well, we'll leave that one alone. Speaking of left to the own devices, Tesla, holy crap, look at this. Almost 2 million contracts trading already. And we're just 55 minutes into the trading session. So, all right, a little bit of a slop fest that we're embarking upon. The advanced decline line has actually gotten better. Okay, I'm not going to go into a lot of the, there's a ton of stocks that have had earnings. Again, tonight, the only thing to me that matters is Meta. Tomorrow, obviously, there's some big names coming out tomorrow, including, I think it's Microsoft, Google. Microsoft and Google are coming out tomorrow. Okay, that is tomorrow is in terms of market cap. I believe tomorrow is the biggest day. Okay, and then don't quote me on that, but I think tomorrow is the biggest day because tomorrow you have you have Microsoft, you have Intel, and Google all coming out tomorrow. So Intel is big enough that I mean, it's an afterthought versus a Google and a Microsoft, but it compounds obviously some of the risk that we're going to take in tomorrow's trading session. And again, I find this kind of an interesting trading week simply because, okay, it's very earnings driven. I mean, the week starts with earnings and is going to end with some economic news in the midst of the last 3 weeks, which have been incredibly volatile. So again, I'm going to bring on Jeff Bierman here in just a couple of moments. I know I've got like 3-4 minutes left, but I'm pretty much over and out over here because again, unless we get some bigger moves. I placed a bunch of positions yesterday. Oh, and there was somebody asked a little bit earlier. Okay. They asked a little bit earlier, am I intent on doing a meta trade for earnings? No, probably not. I'm just not really inclined to put a meta trade on. I already have some skin in the game in meta. Okay. I'm already short, 300 shares. Okay. And I have a put spread on in Catapult. So I am less inclined to do a meta trade. Again, I'm pretty much stacked in there. I make no qualms about it. I would love to see Meta make a significant move to the downside. I apologize to those of you that are bullish, but you can be bullish on the marketplace, but still be bearish on Meta, and I'm good with you. Okay. You could even work for Meta, but you better be bearish. It's the only way to work for a company. Be bearish. Anyway, with that, let me go ahead and bring on Jeff Bierman. Speaking of Jeff Bierman, the topic of interest today is, okay, I have no idea. What the hell is your topic today? I don't think he posted it. Okay. Killing me smalls, man. You're killing me smalls. Normally I would read it off. I think he's still talking about the naked and the dead ramifications of unhedged positions in high octane stocks, part 3. Could be. Anyway, Jeff Bierman is coming on here momentarily. Please stay tuned.